Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to talk about the all-important fiscal statement due from the Chancellor of the Exchequer to Parliament today, and the potential, implications that means to the sterling, but also to the market. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand for entering any trade. With that out of the way, let's get started. So indeed, today, Jeremy Hunt, as he's put it in his own words, is face into the economic storm. Economic storm. Hey, James. Hey, buddy. How you doing? Hope you're good. So face into the economic storm because the Chancellor of the Exchequer, Jeremy Hunt, will reveal his autumn statement. Okay, autumn statement. Now, I don't know if you remember, a couple of months ago, there was another sort of like mini budget, and you know what that caused? But anyway, this is going to be slightly different. The expectation is that there will be 55% of the proposals will be spending cuts, and 45% of the new proposals will be tax increases or tax rises. In financial terms, what this means then, this will generate £30 billion in spending cuts and 24 billion in tax rises. And this is needed desperately to fill a fiscal black hole. Don't forget, last week I did a video that they actually, the UK had a fiscal hole, in their finances of £50 billion. So by doing this proposal will help fill that fiscal hole. As well as that, there is expectation that the energy price guarantee will remain in place, but possibly set for an even higher level. Now, don't forget, inflation yesterday was announced at 11.1%. But the scary thing about it, this what the ONS statistics said, if it wasn't for the government support, inflation in the UK at the moment would be at 13.3%. That is petrifying. Absolutely petrifying. Exactly. I've no worries, my friend. I will be getting to that. I'm going to discuss what I think will happen to the sterling with this, and we'll have a look at it as well. But a good question, a very good question. But like I say, yeah. So that inflation rate of 13.3 if they didn't have the government support. And don't forget, this is a massive upheaval that they face. A massive upheaval. Don't forget as well as that, not only the inflation, but the Bank of England has warned the UK is set for the longest recession since records began in the 1920s. So yes, that's really frightening. Mr. Hunt had this to say. He said, "We are taking difficult decisions to deliver strong public finances and help keep mortgage rates low. But our plan also protects our long-term economic growth." He goes on to say, "At the same time, we will protect the vulnerable, because to be British is to be compassionate." So yes, hey, greetings. Hello there. How are you? Good to see you. I hope you're well. But like I say, I mean, this is in many ways, this plan is going to be austerity. okay, which they did back in 2010 to handle with the financial crisis. And a lot of people are going to get hurt because what they need to do in this statement, okay, is they need to please two sets of people. First of all, the public, Joe Public, because obviously they're behind 20 points against their biggest rivals, Labour. Okay, biggest rivals, Labour. And obviously the election is in 2 years' time. So they need to make up ground. So they need to please the public. But as well as that, they need to please the market. They need to please the market. That is huge because last time, the last micro budget, the market judged it very, very harshly. And we saw sterling and the FTSE and the Bank of England and the gilt market come under a huge amount of pressure. So much that the Bank of England had to intervene to save pensions. But one of his biggest challenges of all in this thingy. Oh, bless you. Thank you very much. I really appreciate it. Thank you. I hope you're well. I hope you're really good. Yes, but his major challenge, the major thing he has to go to, the major thing, his biggest challenge of all today is to restore UK's credibility as a financial institution because it's severely damaged after the disaster of trusted economics and Kwasi Kwarteng's last micro budget. Now, because I think we already sort of know, and he's played it quite well by giving the market indications of what it's going to be, what it involves, I'm not expecting no quasi fireworks like last time. To answer this gentleman's question, what do I see the effect of this? I see a lot of it already priced in, and we'll bring up the sterling now, actually. Let's bring it up now. A lot of it's priced in, and I'm not expecting the amount of volatility that we saw with Quasi. Okay. At the same time, I think the FTSE, which is actually in the red at the moment, FTSE is actually going to be slightly more volatile than the sterling, but we'll have to see how it plays out. It does depend what he says, obviously, but I don't see the mass dramatics of last time. What I do see, though we got a very good sterling or strong sterling at the moment, it's currently trading at 118. It was trading 119 today, so it's already dropped down. That's a little bit because of more of a dollar fight back. Bear in mind, like I say, it actually has bounced back a fair bit from the lows it experienced on the back of Quasi. I am expecting, the market to look at this and go, okay, we know this already, give it a bit of credibility, but in the medium to long term, not necessarily because of its budget, it depends how severe it is. I can see the sterling coming under pressure. More down to the fact that inflation is high and they face economic hardship, massive economic hardship. And yes, UK is on the brink of recession. So obviously I would be watching it. I'm not considering the fireworks like we had last time, but obviously we're still going to expect some sort of volatility, maybe even minor volatility. Because like I said, I think they've done a good job of letting us know ahead of what roughly the plan is. So we are prepared. In other news, in other things I want to quickly discuss, before we look at the other things, the other assets in the market, US retail sales was announced a lot better than expected. It came in at 1.3% versus 1% expected. 1% expected, which is very good. And don't forget, this beginning of the week, I said it was all about retail sales or the retail sector. Obviously, we had really good news for Walmart. Okay, we had very good, that's a good reading. Don't forget, previous number was 0%, so it's higher than anticipated. But Target, though their earnings per share or their revenue was slightly higher than anticipated, only just, their earnings per share was down, plus their forecast was slightly negative. So, 2 out of 3, not bad, but still, Target was disappointing. But even that, I tell you what, we've seen a little bit of dollar fight back today, which is obviously because the tech sector in the Asia session saw a bit of a sell-off, which is affecting the markets in general. There is still a happy feeling. Now, one of the most hawkish Fed members yesterday basically is changing his tune, and that's Christopher Waller. Okay, and this is what he had to say. Looking towards the FOMC's December meeting, the data of the past few weeks have made me more comfortable considering stepping down to a 50 basic point rate hike. Okay, very, very sort of dovish. Here's the thing, though, how I see it. Okay, A for one, we already know that they're going to do 50 in December. So it's no groundbreaking news. So it's no game changer with this. We know they're going to do this. But again, that is still slightly more dovish than usual. And he's very, very hawkish. So like I say, we've got pretty impressive economic data still coming out of the United States. The thing for me here, before December decision, we still got US CPI again, comes out a day before the decision. And obviously we've got the job data coming as well. So we need to see those two things before we can really count our chickens. But anyway, let's have a quick look at the market, other things. Again, like I say, this is the sterling at the moment. Okay, this is going to be the one I'm going to watch. I'm not expecting massive fireworks like with quasies, but I'm expecting a little bit of volatility. Again, it depends what he says, but I think we pretty much know what he's going to say. Euro, again, as we can see, it's been having a good run. Obviously, we've had a lot of dollar weakness and a lot of optimism in the market. Slight dollar fight back today, but to be honest, that's pretty much a tight range of 1.0390, and a little bit of buying around here. We could see potentially about 1.03620. Christine Lagarde is speaking to. Oh, I haven't brought it up. Whoops, Daisy, I totally forgot. I didn't share my chart. Silly me. I forgot. Anyway, like I say, I can see potential buying at the moment, it's sort of range trading at the moment, 1.03890, and potentially buying, a little bit of buying in the short term, potential area of interest of 1.0362. Now, Christine Lagarde is speaking today. So it'll be interesting to see what she says. Yesterday, the ECB vice president, he said they will not hold back. Again, sounding like, almost like the Fed, actually, he sounded a bit like a Fed member. He actually said he will not hold back on their fight against inflation or getting inflation down to 2%. So that's where it's quite range bound anyway at the moment. Let's see what Christine has to say. What should we look at? Dollar yen again. Okay, and this is range bound as well. If you look on a long term, no, on a daily, again, you can see we're range bound, currently trading 139.60. Gold, again, yeah, on a daily, we've had, it's had what, 4 days of gains. 4 days of gains, currently facing a second day of losses. Again, like I said, we're seeing a little bit of a fight back for a dollar. Nothing necessarily sentiment-wise has changed. There's a little bit more dollar fight back. $1,765.36. Still a key area for me at the moment as it stands. Yes, $1,803.50 is a key area of interest. But for me, around the 1790 area is also an area of interest as well. Support does still remain at $1,726.48 is a potential support there. You're about to ask about gold. Oh, there you go. There you go. Well, I'm always going to talk about gold because I'm a gold bug. It's one of my favorite assets, and I've been trading it for years. So I got a little bit of a soft spot for it. It's my first love, so to speak, my first love in the market. And obviously, great minds think alike. So what else we look at? S&P 500. Again, like I say, it's had 2 very impressive days of gains, slightly range bound now, maybe facing a second day of losses, 3,953 points currently at the moment. Yeah, notice that. I know, I can't help it, buddy. I can't shut up about it. I'm sorry. So there we are. Let's have a look at something else I want to look at. Look at Bitcoin, because obviously cryptos have been in the news a lot, obviously with all the recent drama, and obviously Bitcoin has suffered greatly from it. Though it looks like the rot, or the general massive rot which was happening, is calmed down, it's still way under that key level of 18,000. Currently trading at $16,469. Sorry, for $16,467. I'm going to say ounce then, dollars. Anyway, other things to come. Other things still to come. Like I said, we've got Lagarde speaking today. That's going to be of interest. Obviously, we've got the autumn statement. Aussie unemployment tomorrow, US building permits, US initial claims today, and UK retail sales tomorrow. The equities in the European session as they currently stand, FTSE currently negative, like I said, in the red, negative 0.60%. DAX currently trading slightly in the green, 0.09%. Euro Stoxx 50 currently trading negative 0.28%. Big shout out to everybody who's asked me questions today. Rule R, thank you ever so much as always. And Cyril, it's great to see you. It really is. It's really great to see you. And don't forget, anybody can ask me questions anytime they wish, or simply say hello if you like. Not a problem. Like I always say as well, if you think of a question later, you can put it in the comments section, either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which should be later today at 3 p.m. UTC. So I hope to see you then. Anyway, big shout out to, like I say, to Rule R and Cyril. Thank you for your interaction. And if there is no more questions, don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and found it interesting and useful, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. So I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.